Hello, and welcome to Optimize Your Property Tax Compliance Profit Center. I'm Zach from the Earmark team, and just to let you know, you can earn CPE for this webinar by using the Earmark mobile app. Download the app by scanning the QR code you see on your screen or by searching for Earmark on the App Store or the Google Play Store. Unlike traditional webinars, Earmark does not use polling questions during the presentation. Instead, you will verify your learning by taking a short quiz. Once the quiz is available, we will notify you via email. You can then use the app to earn your CPE certificate. So once again, don't worry about polling questions or attendance checks today. Just enjoy the webinar. And look out for an email in a few days with a link to earn your CPE. Don't worry, it will be before the end of the year. Okay, now let's welcome Melissa Schad to take over and let her do her presentation.
Hi, everybody. I'm Melissa Schad, and we're just going to show the safe harbor slide so that we can see that this is confidential information, et cetera. And we're going to talk about optimizing your property tax compliance profit center today. So our agenda today is going to be quick introductions, and then we're going to talk about client services for your clients, data entry and processing automation, valuation and appeal support, and we'll have time for questions as well. I have about 20 years of experience in property tax compliance, so definitely have had a wide range of experience in the things we're going to talk about today. So the first thing we want to talk about a little bit is just because from Avalara, we do have 3 ways to engage with Avalara for accounting firms. One is you have the opportunity to refer clients to Avalara, and that is a way for, if your company allows for it, an earnings potential for you as a partner. So that's an option. You also can be certified to implement Avalara solutions for your clients. So that is another methodology that you can use. And then we also have tools that are designed for accounting practitioners across the tax practice. So those are just some options to think about to engage with Avalara. When we talk about property tax compliance client services, though, that's a little bit more granular. So you have a property tax practice in your firm and you want to be successful at that, obviously. So first thing, lots of little points here that we'll talk about, but being knowledgeable of the property tax rules specific to each jurisdiction. There are thousands of jurisdictions to deal with when you're talking about property tax reporting and billing. And as many of us who've dealt with property tax know, jurisdictions have different rules, different exemptions, different deadlines, all kinds of differences. And it's hard to stay on top of all of those, honestly. I mean, it really, really is. So being knowledgeable about that or using tools that allow you to do that kind of tax research more quickly and easily and tapping into those kinds of pieces of information that you need for each jurisdiction is going to be very helpful for you to be successful. You certainly don't want your client to know more about property tax in a certain jurisdiction than you do. Tools and technology obviously allow you to facilitate an efficient process. We're all working with less resources, turnover, hiring issues sometimes. And so the more that you can automate things that you don't actually need humans to do, the more that you can maximize the use of your humans to do things that are more analytic, more require, experience and thought processes rather than just, data entry. Knowledgeable about valuation principles. So again, property is valued differently in different states. There's different depreciation tables used, assessment ratios, index tables. So there's lots of different ways to make sure that the property that you're looking at is being valued accurately and fairly for tax purposes at a fair market value. Assessors obviously are looking to maximize tax revenue. You're looking to minimize tax liability for your client. So there's a little bit of a conflict there sometimes. Knowing the risks and pitfalls of the compliance requirements. You do not want to be responsible for your clients getting assessed penalties or having to pay for them on the client's behalf if you miss deadlines or miss appeal dates or things like that and not taking discounts. So all of those kinds of things can help save your clients and yourselves money and make sure that you are also appearing as a credible firm that's not missing those kinds of opportunities. And then having a successful method of communicating with your clients, whether you talk to them, whether you're emailing, whether you're sending them reports, you want to be able to do that on a cadence that works well for both you and your client. Lots of different tax laws all over the country. So, we do know in certain states, certain things are exempted based on their business. So when we look at Florida, let's say, Anything that is in a return account under $25,000 is exempt. So you making sure that your property is being assessed and valued correctly can help get a full exemption depending on how much property is at a given location. But if you don't know that, you're not going to necessarily be aware of it when you're looking at assessment notices that may have errors. In California, software is exempt. A lot of people don't pull the software costs that comes with their computers out of those computer costs. So if you're buying a laptop and it's already got software loaded on it, deducting out that cost can save you money. So there's just different laws across different states, sometimes dependent on the industries in those states, like California and software. We all know that California is a heavy computer state. So, knowing those kinds of laws is going to be really helpful to you to make sure that, again, you're taking full advantage of the lowered value and lowered tax opportunities in those states. So what are some of the challenges that befall us? I mean, we've all done this or we are all looking to do it. And so the challenges are definitely, first of all, what do you need to provide and when do you need to provide it by? So the due dates are really, really critical. And again, not every state has a statewide due date for returns or for bills. Sometimes it's county by county, sometimes it's city by city. So making sure that you're tracking all of that so you're not missing anything and you're getting things out on time. Also, keeping in mind that, since COVID, the US Postal Service is not contracting with some of the providers that it was contracting with before in terms of mailing, and nobody's in the office anymore most of the time. So mailing has become a big issue. So making sure things are mailed out on time when the jurisdiction does require paper, which is a lot of them, most of them actually, that's important too to take into account that extra time that it may take for a return to get to, a jurisdiction assessor or that they're mailing bills that you may not be receiving because nobody's there to get them and then you miss a deadline. Making your decisions about what's taxable and not taxable. So, a lot of times your clients will be giving you asset listings, and they may not know that software isn't taxable here or vehicles aren't taxable there, or what constitutes a vehicle or what constitutes inventory in certain states where it's not taxable. So, you need to be very well versed in knowing what is taxable, what is not taxable, and then pulling those out of the reporting so you're not reporting property that your client shouldn't be getting taxed on and then ending up increasing that tax liability. Fixed assets on each form get maps to specific schedules, and there's valuation factors that are appropriate for those schedules. So when you're looking at machinery and equipment versus computers, machinery and equipment typically has longer life than computers. So making sure that you're valuing those assets correctly so that they depreciate appropriately. And if you're putting them in the wrong schedule on the form or the wrong factor, the assessor is going to be confused and they're going to value them as they see fit, not necessarily how you would want that to happen. So, making sure you're on top of those property classifications and that you have accurate valuation factors for those types of property. The assessor sometimes needs additional insight as to why the value is different. So again, jumping back to COVID, obviously lots of people weren't in the office. There was a lot of requests for, exemptions or reductions on real estate values because it was, empty property. They weren't assets that were being utilized. So those kinds of things might be something that you need to be aware of in terms of changing, laws in things like pollution control or economic revitalization areas or things like that. So making sure that you're on top of those things so you can give that information to the assessor if you're trying to shift how property is being valued or asking for an exemption or an abatement. And then this seems like a duh, but sending the return forms to the right location. Sometimes the assessors change. They might be on floor 2 one year and now they're suite 3, or they might have adopted a PO box, or different things happen. So if you don't have that accurate mailing information, you could be sending it to the wrong place and it might get there on time, but if it's the wrong place, you can be assessed a pretty significant penalty in a lot of jurisdictions for not getting your return in on time. So that's obviously not something you want to do. When we think about all of those different things that we have to manage as a person and all of that research and all of those jurisdictions, this is where data entry and processing automation can come in to really help you maximize your opportunities with your property tax clients. So when we think about tax bills, ensuring that bill matches our expectations. When all of those bills start to come in, you could have one return in a county, but you could be getting 50 bills, because it might be that they break it down by location, they break it down by different accounts, they break it down by school districts. So lots of different ways that you can get billed differently than you may file the returns. And so if you have a value that you've provided and that bill comes back or that notice comes back and it doesn't match what you provided, you're going to want to take a deeper look at that and being able to compare easily and effectively where things fall out of maybe a normal threshold range of value is going to be something you're going to want to be able to do quickly. So again, if you did an appeal, did the assessor reduce the value? Did the assessor take property that was disposed off of their valuation for that account or for that location? So you're going to need to be able to compare all of that and check up on it in a few different ways from the return to the bill account. Identifying installments and discounts or other rules surrounding the payment of taxes. Obviously, if you can take a discount, everybody wants to take a discount, but you also have to think about how that's going to impact your client, their cash flow, things like that. Is it better to pay in installments? Do you have a rule about if it's over a certain amount, we pay in installments? If it's under a certain amount, we pay in one installment. So lots of different ways, again, there to make sure that how that cash is flowing in and out for your clients is going to be important to them, making sure that they get sent according to the timeline that's outlined on the bill. There's usually a date that's due and then a delinquent date. If you kind of skate to the end of that delinquent date, you're sort of flirting with, is it going to get there on time? Sometimes it's based on the postmark, often it's not. So they want to receive it before it's due. And again, there's sometimes a range of dates that might be appropriate. So again, deciding whether you want to, go to the end of that timeline or stick to the beginning. And then again, the client needs to know the amounts, addresses, installments. So if you're preparing an AP export file for your client, or if you're paying on their behalf, you need to let them know that everything's happening or that they need to make everything happen correctly. Notices of assessment. Matching the notice of assessment to the filed return of the property. Again, sometimes you get more notices of assessment than you filed returns because they may be breaking down the accounts a little bit differently. So, for example, leasing companies often will file one return to a county or a city for all of the leased equipment in that jurisdiction. But each physical location of that property may get a different notice, or it may be based on city within a county, or. So you kind of have to sometimes play with the math to figure out how did they value this? Because they don't always send you, an asset by asset. They just send you a notice, here's a value, and you're trying to, figure out what does that match up to. So that's also sometimes where tools can really help you to figure out, what property are we really looking at here. Making sure that it's a fair assessment. So again, if you filed a value of, $100,000 and you're getting a notice for $300,000 for that same exact property, you probably want to find out why and if that is really fair. Did something happen or are they just over assessing? If they are over assessing, or if you're not sure, but you want to make sure that you're sort of freezing that process, you're going to want to file an appeal. And what information do you include and where you file the appeal to is important because, again, those have to be done on time. If you don't file the appeal in time, you will almost always lose your right to appeal. Sometimes it's going to be based on the number of days after an assessment notice. So you get a notice on a particular day, but the notice was dated 2 weeks ago and the appeal deadline is 30 days after the notice date. So you don't have much time to file those appeals if that's the case. So you really, again, have to be on top of all those due dates. Managing the response from the assessor, depending on what they say or whether they're willing to negotiate or whether it's going to have to go to court, those are all things that you're going to have to work with the assessor and your client to determine what the best option is. And a lot of times you can sort of play out, well, yeah, if we appeal this and then we get this reduction, how much tax do we really save? Because sometimes with the tax rate in a jurisdiction, it looks like it's going to be a lot of money, but if you're going to save $50, it's going to not be worth anybody's time or effort. So, being able to use a tool to do those kinds of comparisons very easily and quickly is going to help you maximize your actual human resources that you're using to deal with these appeals. And then presenting your client's case to the assessor or board of assessment. You are probably going to need to have somebody in your organization that is really good at that, especially if you have to go to court or appear somewhere or make some sort of public case. somebody that's a good speaker, somebody that's very knowledgeable, somebody that's very credible is going to be, really important. So making sure that you have those kinds of folks on your team. Obviously, saving money on appeals and reducing taxable value are some of the biggest benefits for clients to use an accounting firm. So, the more on top of things you can be with your people and your staff to do those things effectively and show your value to your client, we saved you this much money in tax, we've reduced your value by this much. That's going to be where your bread and butter is. And that's going to be how you maximize your profitability of your accounting practice for property tax clients. Again, save all of the data entry and all of that kind of stuff for things that can be more automated if you can. When we think about valuation and appeal support, we've talked a little bit about the process. The returns get filed, then you get some sort of notice of assessment. Now, you don't always get a notice of assessment, just so you know. So it's important to know where you get them from and which jurisdictions don't necessarily send them. Some jurisdictions will provide them online. Real estate is always going to be something that, they're parcels, it's public record, you can always get the valuation, but you may have to go digging for it. So those notices are, again, something that if you really want to be on top of being able to appeal, being able to make sure values match or reduce values, you're really going to want to be on top of the notices. And I know in my time, I've worked with a lot of companies who are like, I file a return, I pay the bill. And if you don't care about saving money or making sure anything's right, that is a perfectly fine compliance practice. But for you all in accounting firms, that's probably not the best method to adopt. So you are really going to want to pay attention to the notices that are coming in, but also the notices that don't come in. You're going to need to know that you have all these accounts without a notice value and track them down if you think that it's going to be worth it. Again, if the return is $10, it's not worth it. If the return is $1 million and you have no idea what the assessor valued that property at, probably worth it to spend a few minutes trying to get a value, whether you have to call, whether you can go on a website, or whether you need to, again, utilize tools and resources outside of your organization to pull that information for you. But the notices are going to be where that starts. So your returns need to be accurate. Again, reducing those taxable assets in terms of the best value, the most appropriate fair market value. Certainly not telling you to reduce them beyond what they should be reported at, but making sure you take out anything that's not taxable, that you're aware of what's exempt, that you're filing for exemptions and abatements in jurisdictions where you have that opportunity, depending on the type of industry that the client is in. There's different things that are available. So that's, step one of making sure what you're reporting on the return is only what you should be reporting and it's the appropriate cost and value. Also, some of the return forms only have a section for cost. So you don't get to say on the return form, this is what we think the value should be. Most times you can produce a listing, whether it's an asset by asset listing or a summary listing of the property, your valuation factors, and your opinion of value. So the assessor at least knows where you're going with this and what you're expecting to see as a value. Because if you don't provide that, the assessor is going to just provide whatever they think is right. And then you don't really have anything to compare that back to as far as what you think is right. And then again, the notices we've talked about, you don't know exactly when those are going to come in. But, again, most products are going to have some sort of ballpark. Typically this jurisdiction sends these notices around this time. And if you didn't get it by then, you're flirting with not being able to, appeal that property. So that's going to be something that you want to pay attention to. Now, the appeals themselves, there's lots of different layers to what we call appeals. Sometimes it can just be calling the assessor's office and saying, hey, we reported all of these assets as disposed, but I still see them on your listing, or I still think that you're including them in this value. And they may be like, oh, whoops, we just missed those, or they just didn't even look at them or whatever. And they may reduce your value right from there, and you don't have to do anything more. But some things obviously go to court, and they're in court for years sometimes, and they cost millions of dollars. So sometimes it may be worth it to do that. But again, you have to be really aware of what you're going to save, what you're going to be establishing in terms of precedent going forward with that client. That if you're showing the assessor, we're willing to take this to the mat if we need to, because we have really, really good arguments for why this value isn't correct and how it should be valued. And there's a lot of legal firms and a lot of legal precedents too that you can use to support that, as well as comps and other types of comparable property things. And then also what should be exempt, or how a law can be interpreted, also can help you sometimes with appeals. So again, thinking about the people that are in your organization that can really do that kind of research or have that kind of experience. And then tax bills themselves. Again, there's so many that come in. They're all formatted differently. They sometimes change year to year how they're formatted. Some of them are hard for people to read. Some of them are really straightforward. Again, if you have real estate, a parcel number is going to be all the way through with your notices, your appeals, your tax bills. But with personal property or business personal property, that's going to be sometimes one to one, and sometimes it's going to be one return, tons of notices, tons of bills for that same return. And so, again, matching all of that back up, making sure that it's correct, making sure that you're getting the bills that you need to pay, making sure I have 50 accounts in this jurisdiction and I only got 48 bills, because those missing bills are going to be an issue. They expect you to pay them whether you got them or not. So if they think that they mailed them, or they say that they mailed them, if you can't prove that you didn't get it, you're going to be the one paying those penalties and that interest on that late bill. So it's really important to keep ahead of those and make sure you're tracking down missing bills ahead of time. And the only way to do that is knowing what those accounts are going to be, knowing what you filed, and then being able to quickly see what's missing and what needs to be paid, and then when it needs to be paid, where it needs to be paid, how it needs to be paid. Can it be paid online? Does it have to be paid by check? There's, again, lots of different things there. And if you're appealing but you get the bill, you may have to pay the bill until the appeal finishes, and then you may get a refund. And so, of course, you're going to want to track that down as well. So there are some horror stories that are out there, because there's lots of bad returns. There's lots of things that happen in these processes that unfortunately, we want to all avoid. So things like a bad return. When we talk about a bad return, I have had clients who have come to us because they have filed hundreds of returns in jurisdictions where they should have been exempt. In some cases, these were pollution control. Now there's a lot of renewables, renewable energy, battery people, solar, all kinds of stuff like that that are happening, that they may not have filing requirements, or they may have filing requirements to file a return, but the property is all going to be exempt. So I had one client who did not file about 300 returns, all of which he would have been exempt for, but unfortunately, he just decided he was exempt and he didn't need to file. Well, he got penalized for every single return he didn't file because he wasn't in compliance, even though he would not have ended up having to pay any tax on those. It was just the whole point of the filing. So, those kinds of things are not things you want to have happen. You want to make sure that the filing requirements are met. Again, mailing things to the wrong place. Had people who've used last year's form. Last year's form might look sort of like this year's form. It might look different. It might have different things broken out, and it might have a different address that you're supposed to send it back to. So, not using a verified, validated return form is not going to be a great practice that I would recommend, because it could be different. And again, unless you're really looking, hard at last year's versus this year's, you may not notice that there's some differences to it. So that's another piece. Um, Using incorrect tables. Some of the forms, like Michigan and Georgia, have those depreciation factors printed right on them. And sometimes, if you do the math and it doesn't match right, that's going to be a little bit of a flag for an assessor. So returns, again, making sure that they're filed in the right place to the right person, right timing. Virginia is notorious for having lots and lots of different assessors at the city and the county level, having different forms for all of those different assessors, having different due dates for all of those different assessors. Also, I've had people who know that they can file an extension in a certain state. And so they took that as the due date, but they didn't file the extension, so they didn't get the extension. So that wasn't really their due date. So again, lots of penalties and interest on those kinds of situations where, a mistake was made that didn't have to be made. On the flip side, just as many stories, people who have not appealed. and then now are running comparison reports because they finally, brought software in and they're pulling in all their history and they're like, oh, wait a minute, this has been valued wrong for years. You can't go back 4 years and appeal. It's too late now. So you can go forward, but you're not going to be able to go back. And so it's almost, in some cases, people are like, I really wish I didn't even know this. And then bills. I had one client who they were not the sole taxpayer, but the biggest taxpayer for a particular school district in Texas. And so in that particular case, they had a situation where the school couldn't open because they hadn't paid their tax bill yet, because they hadn't gotten their tax bill. Because their tax bill was in a stack in the mailroom, and somebody walked by the stack, and one bill slipped off and went behind a cabinet. And they didn't have anything in place to know that that bill was missing, so they just didn't pay it until, the collector's office was like, "Hey, we can't do this. We can't open the school. You have to pay your tax bill." They said, "We didn't get it." They're like, "Too bad, we sent it." So they ended up, and it was a really big bill because they were the main taxpayer keeping that school going in Texas. So it was a lot. And so they, again, ended up getting a penalty and interest that was humongous. And they had no idea what had happened. They were so frustrated. They didn't find that bill until they moved offices 5 years later. Somebody moving that cabinet found it and was like, "Oh my god, there was that bill." So, I mean, it is horrible. They ended up having to spend so much money because, something happened like that. But again, if they had known that that bill was missing, they would have been able to contact the collector's office or go on the website, pull it down, and pay it on time, saving everybody, the hassle. So another one, I had an accounting firm actually that mentioned that there were a group of people that were supposed to be processing tax bills on a client's behalf, and they didn't file it on time. It was, October 30th instead of the 31st or something like that. And so they were sweating it because they were going to have to pay like 200 grand in penalties and interest. And it turned out that because it was due like 30 days from something, that when you counted the days on the calendar, it actually fell into where they were compliant. So they didn't end up having to pay it. But it was a very close shave and they were very stressed out and sweating it in the meantime. So again, having a mechanism to track all of those due dates, all of those accounts, and make sure what you've completed and what's still outstanding is going to be something that you really want to make sure that you're on top of as an accounting firm. You do not want to have to go back to a client and tell them any of this, or worse, have the collector get in touch with them or an assessor get in touch with them because they're the taxpayer technically and say, "Hey, what about this?" And they're like, "Our firm didn't file this or pay these," or, whatever might have happened. That's not great for your credibility, and it's not going to be good for your profitability either. So making sure that those tools are in place and that you have, knowledgeable people that are on top of that and you're planning for resources as well. Sometimes you don't know all of what's going to come in at a particular time. And so maybe everybody's on vacation or everybody's on another project and then you have this huge thing and, there's nobody to really do it. So being able to see and plan out, this is when people can kind of be shifted around, is also a good idea. Many of you have different responsibilities. Sometimes you have a whole group working on property tax all the time. Talk to many firms where they have one person doing income sales and use and property tax, or, they're doing licensing compliance and property tax. And, there's just a lot to manage with both of it. And if that's the case and it's overwhelming, things are going to slip. I talk to a lot of people too who, they're kind of at their breaking point, but their boss doesn't want to spend the money on software tools or another resource or something like that. So they're, eventually that's going to be bad for the company, just like it's going to be bad for a firm where people kind of get so overwhelmed that then you're left short staffed, but you've taken on all these engagements and there's nobody to do them. It's a churn that you don't really want to have to deal with. So when you think about your current clients, if you're working with property tax already, you probably already have sort of a talk track for it. But if you're going to be newer to property tax, or you have clients that are using you for certain types of work and not other types of work. So I have worked with a lot of firms who are doing returns for some clients, but the clients are handling their own notices and bills, or they're, doing appeal work for somebody, but they're not doing the returns or the bills for that client. And so there's lots of different hybriding of property tax work that you can do for your different clients. So you can do it kind of separately, or you can do it all together. It's important to think about who is going to be appropriate. Obviously, there's some clients who do not have a lot of personal property or real property. They are using you for other types of things. But anybody that has a lot of physical locations is, pretty much a slam dunk to property tax. Now, obviously, you have to handle it kind of tactfully because depending on who they have in their organization, it may be that these people are fearful of being replaced, that the idea of automation is something that concerns them because, again, they think they're going to lose their job, or maybe they are going to lose their job if they shift over to you or they automate more. So handling that in terms of how you can help them versus, be threatening to them is, something you want to think about how to communicate that effectively. But anybody who has lots of physical locations, they're going to have real property, they're going to have business personal property, they're probably going to have inventory, they may have vehicles, depending on, if they're delivering or things like that. So, things like convenience stores or movie theaters or clothing stores, any type of retailer um, is going to be obvious. But also, you have your leasing industry, you have oil and gas, you have energy, you have manufacturing, you have, anybody else that has any type of business that is going to be environmental. Like I said, there's a lot of renewable with solar panels, and they're not really leased, but they're almost treated like leasing or, things like that. Lots of different opportunities to do that kind of property tax work for folks. And again, having tools that are in place to automate that process for you so you don't have to keep track of all of that is going to help you make that cost effective for your organization while being able to, make profit from your client for that work. Also, a lot of people that are using accounting firms might be too small to have their own software to invest in that kind of a product, but because you can then mitigate, we're going to charge our professional services fee as well as some portion of whatever your software licensing fee might be, then that's something that you can present to the client as a package so they're not going to see it as a separate cost. And then, it's probably going to be able to be broken down more across your client base than it would be for them to make that investment potentially, especially if they've lost anybody, they've had somebody retire. There's fewer and fewer accountants coming out of colleges or that have this type of experience or that are even staying in the industry. And so there's a lot of companies that are looking for people to do this type of work, and there's just aren't that many people. So again, the more you can automate that and then use your staff and your resources to do the higher level work, the better it's going to be in terms of how you're going to be able to make more profit from those clients and also reduce your costs and your time. Because again, you and your client aren't going to want to be burning the midnight oil every night from January to May. That's no fun for anyone. So, lots of different books of business that you can look at in terms of industries that are going to have a property tax need. When we think about Avalara, property tax for accountants, we're talking about applications, software, things like that. So there's lots of tools, and I'm going to touch on different pieces that you would want to be looking for. So when you're thinking about how you're going to be able to, be profitable for real property and personal property, you're going to want some sort of tool or some sort of application that is going to allow you a few different things. One is that you're going to be able to manage real and personal property. So you're going to need to have return forms for the personal property, but you're also going to need to be able to separate out real property notices, personal property notices and accounts, parcel numbers and assessor accounts, and then bills. Again, the parcel numbers are going to be for the real property bills, and then whatever account the collector assigns for those other tax bills for personal property. So you're going to want to be able to manage that together because you're going to want to be able to report on it together, but you're also going to want to separate it out easily. Because again, the real property is a lot of times where the big dollars are going to be in terms of appealing, in terms of valuation, and then in terms of making sure that you're not missing appeal deadlines or paying those bills late because they're big bills most of the time. In terms of the personal property, sometimes that can be a lot, and sometimes it doesn't turn out to be a lot. So it just kind of depends. But that's where being able to reduce that taxable value and show your value for those clients is important to make sure that you're looking at their asset listings and classifying things properly. assigning appropriate depreciation tables, pulling out assets and making them, non-taxable so that they're not going to be included in a return form that they shouldn't be included in. So being able to do that in an application and automate that process so that going forward, you do that once and then you don't need to worry about it going forward. You don't need to keep, reclassifying property all the time unless something changes. Also, making sure that it is a secure browser agnostic hub, that you have, a web-based browser or some sort of easy access to that software. Because again, I'm sure most of you have experience where you've been in an airport somewhere and you have to approve something, or, something happens and you don't want to be like, oh my gosh, I don't have my laptop, or I don't really want to like get my laptop out and start it up. Some things you want to be able to just do from any browser on your phone or your iPad or something like that. So that makes it a little bit easier to do that. It also makes it easier if you want to give your clients access to some of that data. So again, if you want to be able to provide some of that information, you can. The other piece is if your client is using a software, then it makes it easy for you to offer to do certain work for them in their software. So you can hybrid it that way as well, where if they give you rights, they can just have you log in and pull out data for appeals, or, upload tax bills or whatever you're going to be doing for them. So that's something to definitely consider in terms of, what type of application you're going to use and what you're going to choose. Automating the document data extraction and validation. So one of the biggest issues in property tax is you get a lot of paper, a lot of paper. Sometimes you can get, assessors to send you values with Excel files or something like that that you can then upload. But a lot of times you have that physical document, and you want the physical document that has the appeal deadline and, has sort of the breakdown or whatever they might have on there. But you don't want to have to data enter that. And you certainly don't want to have to data enter the tax bills. So looking for an application like Avalara Property Tax, where you upload those documents and it extracts all that data automatically using OCR and AI and machine learning and humans that we have on our team to do all of that for you, so your team doesn't have to sit there and data enter bills, or do 100 imports or anything like that. Everybody is going paperless or has gone paperless. Everybody's scanning everything. But having a system that can actually read all of that for you and act as basically a whole separate data entry team as part of your application is a big game changer for most accounting firms. The time savings and the accuracy and all of those kinds of things to just go in and have all of those documents linked, all of the data extracted for you. The comparison is already set up where you're like, oh, these are the ones that fall out of our threshold. These are the ones we need to work on for appeals, and not have had to do anything yourself except for have somebody upload those documents is huge. So that's definitely something that can really, really help you. It also can be helpful because, again, if you're using that application, our application, the client can upload the bill to the portal. If the clients are getting their own documents and they're like, we don't want to do any of this, we're just going to upload them to the portal and then you guys look at it, that's perfectly fine. It's web based. They can upload it on their, internet browser and you see it on yours. It's not a big deal at all. So that's also another way to make it easier for everybody, because you may not want to take on the responsibility or the liability of physically having the documents sent to you. We all know how hard it is to get an assessor or a collector jurisdiction to change an address. You can ask them for years and they still send stuff to the locations, or they still send stuff to corporate instead of to you. And vice versa. Sometimes you're like, please send this back to our client. They're not doing this with us anymore. We don't want to get their mail anymore. So kind of keeping that separate, but still having that point of contact to have them automate that upload and then have you just be able to see what all got extracted will allow you to manage those bills and those deadlines for them a lot more easily. Managing their property tax liability through the returns process, assessments and appeal visibility, reduction of penalties. So when we look at the sort of, tracking model on the right, you know, the the return forms, as we've talked about, are not always easy to get. You have to go to all of the different websites, or you have to hope that the assessor is going to mail the form to you this year, or whatever might be the case. And again, it might be tempting to just go to the website when you're ready and pull it down, but it might not be the most updated form. It might not be the validated form. So with our application, having those return forms there and only released when they have been released by the assessor, these are the ones that we're going to use and approve this year, is really important. You do not want to have it sent back because it's last year's form or because, there's something else wrong with it. It went to the wrong address, any of those kinds of things. So you don't have to go out and get those forms. You don't have to go out and get those due dates. That's all already provided. The return due dates, the bill due dates, the depreciation tables, the index tables, the schedules, all of those kinds of things are provided for you in the application. So that saves a ton of tax research for you to be able to know right there on the home screen dashboard. Here's the calendar. Here's everything I've got going on this month. And as we work through this, it all drops off so we can just see what we have left to do. So that makes it a lot easier to do those kinds of workflows and make sure that your resource planning is in line for what your volume is expected to be. If you have, 5,000 returns due on a certain date in a given month, don't give everybody that time off. It's not a good idea. Also, again, having those mappings of those classes that you set up. If you know that this type of machinery and equipment should be mapped to a particular depreciation schedule, every time that client adds property to it, then mapping it once, and then every time you do that upload, it already applies that automatically for you, is going to again save you time on both the research and the calculation piece. And then having those return values to provide on those automated listings that can go with your return is also something that will be very helpful to you because, again, you're telling the assessor on behalf of your client, this is what we expect you to value us at. And if you don't, we might have an issue with that. So, automating a lot of that return process is going to be something that's very helpful to you. Also, the visibility of the notices and the bills and the appeals. So when you load accounts into the application, you can see all of the accounts right there in the screen. As those uploads come through and get extracted, they automatically update to say that they are not missing anymore, they've been received. So if you have accounts that still say missing, maybe there's two and you're expecting all of these notices to have come in, then that's where you're like, we got to track these down because I already see that there's still two missing. I don't know what happened to them, but now we have to take action on it. So, again, making it easy for you to see where those gaps are in the documents that you've received, whether it's a bill or a notice, and be able to track it down timely so that you don't get assessed penalties or interest on a bill and you don't miss an appeal deadline or you don't miss the opportunity to make sure that the valuation was in line with your expectations for your client, so then you can determine whether you're going to file an appeal. That visibility is really important, and the easier you can make it on yourself, the better work you're going to do for your clients to make sure that everything is correct with their valuations and with their billing. And then secure document storage, and you can append supporting material to your tax bill payments. So again, that document, if you're like, wait a minute, what did we do last year? You just flip it in and pull up the document right from the application. You don't have to go looking through a share drive or going through 300 levels of folders, because I see you guys and you have a lot of folders. There's like a whole big folder, and then there's like it's like going down into the diamond mines. You guys, like there's so many levels of folders. So trying to find one document sometimes can take like 20 mouse clicks. You don't want that. You want to just be able to see it right there. Here's the account, open the document, and it's right there. And you're like, oh, okay, then that looks okay. Or wait, what happened here? Why was this different last year? So you have all of that right at your fingertips with our application. So those are all really, really important things. Also, something else to consider is your clients often want reports. That's one of the great ways to communicate with your clients, is through reports, because then they can see what you've done, they can see what's outstanding, they can compare values, tax bills, you know, all of the payments, all of that over the years. All of those different things will be information that you are holding right in one location. And because our particular application has an open API database, you can connect it automatically to an Alteryx or Power BI or tools that do data analytics. So you can easily provide them with real-time reporting where they can query any field, anytime, any report. You can build it however you want and develop that as a report using the open API database. Make dashboards, charts, whatever kinds of comparisons you want to run. And again, once that's built, it just queries it. It's not like you have to like sit there for hours while it runs a giant report. So that's also something that you can offer as a benefit to your clients that, again, it looks really complicated, but it's really easy because you've already set it up that way. And then you can just provide it to them. So lots of benefits to using that kind of application. And again, lots of time and cost savings in not having to worry about the forms or any of the other jurisdictional data research, and knowing that it's all just right there in the application at your fingertips, along with the document extraction and all of the other automations that you have throughout the systems. Because again, nobody has too many people on their tax team. Nobody has too many resources that nobody knows what to do with their time. Nobody's going home at 4 or 5 during tax season right now. I haven't heard of this in years. So the more automation that you can do, the more automation that you can provide for your team, whether you're shorthanded or not, that's going to free them up to do work on time, do better work, do more analytical work, and for you guys to be able to take more advantage of, the opportunities for, lowering taxes, exemptions, abatements, appeals, bill bill validation. And it's also going to enable you to take on potentially more clients. Because if you can cut the time that you're working on some of this stuff for each of your clients, then you might have more time and more resources or more, opportunity to take on additional work. If you're like, oh, we can cut out all this data entry that we're doing, or we can save money on our, teams offshore because they're doing this, automation, then maybe they can do some of these other things. And now, everybody has a little bit more bandwidth. So those are all things that I think are really valuable in terms of thinking about Avalara property tax for accountants, and certainly using tools that are available. And there are other tools that are, very useful for different things in terms of, geospatial tools for, identifying jurisdictions accurately. I don't know how many times I've heard people have, sent something to the wrong jurisdiction, and they're like, oh, no, it's not in this township, it's in that township, or this is really the DLGF taxing district for Indiana and not this one. And there's really nowhere great to look it up anymore. Like, it's really hard to find some of that information. So there are some tools for that. There are tools for bill payments if you don't want to pay them directly. You can use any bill, or, and billing services like that where, they pay them or they mail returns for you or for your clients. So again, you can say, like, we use this application. If you don't want to have to mail the returns, or we don't want to mail the returns, we can just do it through them. And then it's automated through our APIs. So those are also some things to consider in terms of what offerings you can make to your clients. And then the web-based system allows you a lot of flexibility in hybriding work, whether it's their system or your system. So we're close to time at this point. You can definitely contact us if you want to, accountants@avalara.com, or go to our website. I would say if you have specifics, email. And then you guys saw at the beginning my slide, I'm Melissa Schad, SCHAD. I'm on LinkedIn. I'm happy to have you contact me directly if you have any questions you don't want to ask on this webinar. Or if you want to connect on something else, happy to chat. So you're welcome to hit me up on LinkedIn as well. So Zach, I don't know if there's any questions in the chat or anything that anybody wants to discuss, but I'm happy to stay on and do so.
No questions right now, Melissa. I'm going to just remind people how they can earn their CPE. So, as a reminder, all of our attendees right now, if you're listening to this live and you want to earn some CPE, keep an eye out for an email in the next few days that will contain instructions on how to take a short quiz through the Earmark app. And if you have any questions for us, please email support@earmarkcpe.com. Thank you, Melissa, and thanks to all our attendees. I hope you have a great rest of your day.
Thanks, guys.